Going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 18 to the Asian Session Library. If I do sound a bit funny, it's because I'm sick. Do bear with me. Here we have UJ, another example of the model playing out with the pair UJ. I haven't changed the pair throughout this whole series. If you go back and check episode 1 all the way up to this episode, you can see I haven't changed the pair at all. However, many people do ask, can you use this model on other yen crosses? You definitely can. And you can even use it on some majors as well, like EU, GU, NU, and AU. It's not preferred. I prefer people to use the yen crosses though when trading this model. It just makes more sense because of the volume that comes in for the Asian pairs. Here we're looking at New York lunch session. That's 12 p.m. to 8 p.m. This is the dead zone. No trading is permitted. However, in order to trade the Asian session, we are using this session's liquidity pools to help us figure out a trading idea here. What I normally do is find the swing highs and swing lows that are unbroken, because that's where the sell side and buy side liquidity is going to be residing. To this swing low has sell side liquidity below it. This one as well. We have one here. And I'm taking all the ones that are unbroken. We have one right here. So that's all the sell side. And then we have a swing high up here, which is going to be the buy side liquidity. At this point, I'm not trying to predict whether or not Asian session is going to run up or run down. I just want to be counterparty to the breakout traders. I'm waiting to see price break a significant level that I have marked off here and be counterparty. I'm trying to trade against those that want to sell on the break of a low, or vice versa. I'm trying to sell against those trying to buy on the breakout of this high. That's all this model does. It's a turtle soup setup, or it's a false break setup. So let's play it forward. You can see price comes down and it breaks that swing low here. Let's mark off the opening price as well to the session. Put that in black. So that's 8 p.m.'s opening price. And the opening price is fair value. When price is above it, price is going to be overbought on a premium. Ideal for sell setups. Vice versa, when price is below the opening price or below fair value, that is oversold or discount. It's ideal to be buying below the opening price. You can see here, we break that 15-minute swing low. So that's our first step. We have to see one of the swing points being broken. At this point, I would assume that retail traders are going to want to go short on the breakout, assuming that Asian session is going to just continue to drop lower. That may be the case in some scenarios, but not all the time. Here, price breaks that 15-minute swing low. Next, I go down to the 1-minute time frame, and I'm looking for a market shift to the upside. This market shift as well needs to form below the opening price of the session. What that market shift looks like is a fair value gap through a swing high. And you can see that swing high here is broken with this fair value gap. So that's the fair value gap right there. You have a swing high here. You also have another one over here that it runs through. What I would do now at this point is wait for price to trade back into the fair value gap and go long. I'm going to be looking for a 1-to-1 scenario. So I'm going to be risking 15 pips to gain 15 pips. Close enough. So I'm looking for a 1-to-1 scenario. And then I'm going to see what price does here at this point. We got really close to the TP. We got about definitely 10 pips into that, 12 pips into that. And there you go. We got our 15 pips hit to the pip too. And I was showing this in the Telegram channel. I was able to make a 2% gain on the account. So the 2% was $200 because the equity of the account was 10 grand. So 2% of 10 grand is $200. So in this setup, I was risking $200 as a loss or $200 as a possible profit. And I made $200 profit off of that model. And after that, BTC price sold off. So this is why it's really important to pay the trader and not to get overly greedy. If you're able to get 10 pips out of the market, take it. If you're able to get 15 pips out of the market, take it. 20, 30, 40, and so on, that's even great. Just make sure to pay yourself. And that's episode 18. As you can see, it hasn't changed. The model is exactly the same as the other examples. Peace.